Welcome to the Home Building Hub, your essential podcast guide to building your new home. Hosted by industry experts Colin Bischoff and Darren Brennan, this conversational podcast will help better educate you about all things new home building so you can avoid costly mistakes and enjoy your building experience to the fullest, no matter which home builder you choose.
G'day folks, and welcome to the Home Building Hub. Another episode here with myself, Colin, and co-host Darren Brennan. As always, we have a pretty excited guest to join us today. We're going to talk about a topic that some might consider boring, but he lives it, breathes it, loves it, and that topic is tax depreciation. So this episode's going to be targeted for you guys and girls out there who are investors. We've got a special guest. His name's Theo Mavratzakis, hopefully that's correct, from Tax Depreciation Australia. And Theo's going to take you through how to save some money in terms of utilising the amazing things that are tax depreciation reports. And he's also going to introduce you to something called scrapping. So, Darren, how you going today, mate? You excited for this one?
Mate, I'm excited, but geez, Theo's taking it to the next level here, mate.
He is.
Conversation before we've jumped on, and the other day, mate, pretty wrapped up Theo on board, and I'm sure people will take a fair bit out of this conversation today, which is great.
They will. So we welcome you, Theo, to the Home Building Hub podcast. Thanks for coming along, and please say hello.
I'm excited to be here. Colin, Darren, lovely meeting you the other week too, and obviously being on today's episode with you. I tell you what, as I mentioned, I really do love tax depreciation reports, and I promise you, for the lovely listeners that are out there or watching us through these lovely portal today, you will all get a bit out of what I do, and I promise you by the end of it, you all want to buy an investment property and get a depreciation. And even if you don't have an investment property, you'll want a depreciation report. That's how good these things are. So thank you for having me, gents.
Yeah, awesome. Very nice, Theo. So let's begin from the top. So before we can understand what tax depreciation is, perhaps we must first understand what a quantity surveyor is, what they do. So could you just begin, maybe just take us through that part first, Theo?
Sure, Colin, not a problem. So I'm a quantity surveyor. So I'm a director of this amazing business called Tax Depreciation Australia. And as a quantity surveyor, it's split up into three particular categories. So you've got the pre-construction phase of a process, which is to do with more the design development of a site. You've got the construction phases to go through that particular stage by stage process of the build. But then you've got that post-construction stage. And that's to do with more what I specialise in, which are these amazing things called tax depreciation reports. So quantity surveyors are specialists in building measurement and cost estimation. I keep saying it's 4 years of studying a Bachelor of Construction Management at uni to take photos of people's toilet seats. It is such an exciting subject that we do.
Mate, we were joking the other day, and you mentioned the term QS, and I said we have a great family term for QSs. We drive past many in the country. We call them quality shitholes, and you know. But it's a pretty important part of the process if you're buying an investment property. Obviously, is getting a depreciation schedule for your property, and I guess maybe leading into that, tell us a bit about what a depreciation schedule is, how that's going to work. Obviously, we've got to be pretty what's the word I'm looking for here? Broad in our statements. This isn't financial advice in any way, and we spoke about that the other day. And so, broadly, what does that look like? How's that going to help someone out in their journey? And how does it work, really?
Yeah, good question, Darren. And again, 70% of investors in the market, based on our data, shows us that people don't actually have one of these reports. So what it is when somebody buys or builds an investment property, my job as a quantity surveyor is to really extract every possible deduction in that property for tax purposes. So it's like going to an accountant and giving them receipts for things like your fuel or your uniform. But if you own an investment property, the things like the lights, the blinds, the carpets, the door closed on the back of one of these, screen doors, that's a tax deduction. Or the spa bath, the jets in their tax deduction. So my job or our team's job is to go out to any type of rental property or investment property, pinpoint all of those items, place it into one of these 40-year booklets, allowing owners to claim thousands of dollars. So I can tell you straight off the top of my head, for a brand new 3-bedroom house that you build anywhere around Australia, you need to claim $10,000 to $15,000 in depreciation claims in the first year, 40 to 50 grand over 5 years. Smile, it's really good stuff, guys. It really is, and it's something that a lot of people, as I mentioned, don't know about.
Yeah, for sure. And obviously with that, so you're going to go through and literally take photos with a book and write down all these items, and then does the value of what you're able to depreciate change per item, and how does that sort of work?
Good, another good question. Geez, you hit me hard with these good questions today, Darren. I love this. This is good. So basically how it works is obviously a building structure will depreciate at 2.5%. So that's your bricks, mortar, concrete, retaining walls, fencing, wiring, all those elements that are made into a build that you can't rip out. But then you've got the other assets. So they're all the plants and equipment items, which are things like the lights, blinds, carpets. So they all have different effective lives, meaning they will depreciate at different rates. Because as you can appreciate, a hot water service is not going to last you for 40 years, is it? You know, a curtain or an oven, they're not going to last for 40 years. And going back to your point about making sure we go through it with a bullet point notebook to go through and pinpoint, that's what we do. If it's there to be claimed, we will claim it for the client, and that is the critical thing. Those little irrigation systems that sit in the front yard there to the watering system, they're a tax deduction. You know, the actual, not so much even the actual system for the air conditioning, which is a plants and equipment item, but even the actual vents themselves, they're a tax deduction. So it's all about ascertaining what we can find and putting a report in place so they can claim thousands of dollars.
Yeah, cool.
So it's a specialised report that you get from a quantity surveyor. So just to clarify, I guess, for people who think they can get it from an accountant, that's not the case, is it?
That's another good question. So with a lot of people think that their accountant does these types of reports, and mind you, we get referred to by thousands of accountants Australia-wide. They love utilising our service because they're obviously preparing the return for the client. My job is to independently look at that investment property, put a cost next to every possible item that we can claim in that property, prepare that booklet that complements the accountant's service. So an accountant won't go out to the property to pinpoint those assets. They won't know how much the plasterboard's worth or how much it will cost to put all the piping in or the electrical works throughout the place. That's what we do. So we, again, independently put a value on all those assets, prepare a report that goes to the accountants.
And so is this effectively almost like a replacement value, I guess, is really what you're putting together is that sort of dollars, you know, in terms of what then they're able to depreciate? Is that sort of how it's working for people?
Yeah, so how it works is, for example, you build a property, you build a brand new property, and you've got a contract price of, say, $500,000. Out of that $500,000, there's a full list of every single item that goes into that building. There'll be a list of all the appliances that are going into that property. There'll be everything that makes up that building will be within that contract. Our job is to go through that contract line by line and put the true value of those assets into the report. Because as you can appreciate, as a builder, you're doing volume. You've got access to so many of these lovely items that you can buy at bulk. But what we do for that individual client is go line by line, put the true cost on those items, work out the Division 43 or that construction cost, and then give that report to the client so they can claim for, again, that brand new 3-bedroom house, 10 to 15 grand back in the first year, 40 to 50 grand over 5 years. So, yeah, pretty impressive.
Yeah, cool.
That's pretty cool. And you're saying, Theo, not one of the questions we prepared, but across your journey, how many out of every 10 investors, how many are not actually aware of this or not doing this?
Yeah, out of 10, based on our data, we're saying roughly, 7, 5 to 7 people that we meet have no idea. And there's so many different elements to that particular question too, because people think that older places, it's already depreciated, it can't be claimed, or someone's bought a place that's had a report that, it can't be claimed, or, there's so many elements that even commercial buildings, which I'll talk about later down the track as well, but so many people that are holding assets, holding, businesses, holding old brand new ones, aren't aware that they can claim these deductions. And I think by being on your platform today and helping people out there to say, no matter what it is, allows the opportunity of looking at it, because if we can't double our fee worth of claims in the first full year, there is no charge for our service. And we'll back that in every single time.
Yeah, how good's that? It's a guaranteed great result, mate. That's what it's about, isn't it, really?
I've been doing this for 16 years now, and I don't know if you can sort of tell, like, it's not a negative thing. You're saying to someone, you've got an invest. Let me find you every deduction. Here is a booklet, saving you thousands of dollars. It's like, steak knives, even they're deductible as well. We'll claim everything.
It's interesting you say that. When we were chatting the other day, like the wealthiest people in Australia do everything to pay the least amount of tax, right? And so if you can back down that path, why wouldn't you want to do the same? And that's what getting a depreciation schedule obviously is all about, is helping ensure you pay the least amount of tax, and that means more money in your pocket. That might mean you're closer to that next investment property, that next opportunity. So, and, in today's society where, cash flow for a lot of people is tight, this helps. It could be thousands of dollars you're getting back every year because you've gone and seen Theo or somebody like Theo to get that done. Mate, how long do these reports last?
Once a client engages with us and we do it once, we project, are you ready, gents? Mm-hmm. We project a 40-year report. So they never, ever have to come back to us once we've done it once. It lasts them for 40 years. I spoke to a lovely client recently, and they just said, I'm not sure about this report. And we're saying that we're saving you, I can tell you a ballpark figure between 10 to 12 grand in the first year. Okay. When's it finished? In 2062. So, how good's that? They never have to engage with us again. So it's a 40-year booklet that we prepare for once. And again, if we can't double our fee in the first full financial year, there's no charge for our service. So it's a win for any party out there.
Yeah, absolutely. What also, you're saying 7 out of 10 people haven't actually got one of these reports. I know if I'm listening to the podcast and I'm an investor, well, I want to pick up the phone, give you a call. Mate, how soon can I get this report done? It's tax time coming up, obviously.
Christmas time. It's Christmas time.
End of the month. Yeah, absolutely. About to give out all these gifts, mate.
Yeah.
But, can I get the report done quickly? Obviously, if I haven't had it done, the property's now 2, 3, 4, 5, could be 10 years old. How far can I backdate that? Because, Jesus, if you're talking about, 10 grand, call it, just as a rough number, well, if I haven't claimed and got that amount of money back, can I go backdating this thing, and how many years can I backdate?
Sure, good question. So basically, it's pretty simple. Call me now. Call me right this minute while we're on this podcast. Call me now. I'll take any call, any time of day. I love depreciation. So, by all means, call us on 1300 417 317. Please call me right this while you're driving along and you're looking out those QS things out there. Call me. So straight away we can get the process started for any client right here, right now. Turnaround times is generally 1 to 3 business days. Once we've engaged with the client, they've provided us with all the information and a site inspection is being carried out if required at the building, they're a really quick turnaround for our business. The second part of your question is, can you back that? Yes, you can. The ATO allows you to amend up to 2 years worth of missed deductions. So if you're sitting there going, I've had a place for 5 years, can I amend? Yes, claim those missed deductions, put them in your pocket right now, which again, as you gentlemen mentioned, it frees up cash flow now to go and look to buying that next investment, buying an engagement ring for your partner. It could be anything that you want to do with some money, but it frees up the cash now in that property to put into your pocket.
Yeah, it's
Very
great, mate.
nice.
Awesome.
So I guess in line with that, so we can backdate. So it lasts for 40 years, the report. We can backdate a couple of years for 7 out of 10 of us who haven't heard of this and haven't done it on the property that they already have as an investment. So one question that might be in people's minds right now is, how old does the property need to be in order to get one of these reports completed? Is there a limit?
Good question. It's never too old to obtain. Seriously, I do feel like Santa.
The Santa of depreciation.
The
Yep.
Santa of tax depreciation, the Greek Santa out here to maximise deductions. Double count points and double the cost in my eyes. No, just joking. So, yeah, good question. It is never too old to obtain a report. The quick qualifying questions that we pose to any person out there, again, if you're driving along and you've got this investment property, you've never heard of this before, if your current residential investment property has been built after the year 1987, pull over, call 13. Because that straight away means that they can claim the construction cost of that building. So I met another client. Oh, Theo, I've got a 20-year-old build. 20-year-old investment. Can I claim? Well, yes. There's still 20 years left to go of that building. And let's do a quick maths lesson. How much does it cost to build a house? It costs more than $100,000, doesn't it? And if you're using $100,000 at the bottom construction cost, $100,000 at 2.5% over 40 years is guaranteed $2,500 every year. So any property after 87 automatically qualifies for that. Now, what happens if you've got a client or you've got a current property in place that's pre-87? Say one of those old, beautiful Victorian style buildings in the middle of whatever capital city that you're at. Can you still claim? Well, the second question I ask is, has there been a renovation done by the owner or by previous owners? Because if they have, my job again is to extract all of those renovation costs, so the renovated kitchen, the renovated bathroom, extract all of that, place it into one of these, again, booklets that will allow owners to claim thousands. So no matter how old it is, just allow us the opportunity of looking at it. If we can't double our fee in the first full financial year, there is no charge. But if we can, it's going to be a great Christmas for all.
Yeah, it's great, mate. Now, Theo, tell us a bit about scrapping, mate. It sounds like when you mentioned scrapping the other day, I was thinking, is he talking about like putting pictures in a book? Like, what is this scrapping thing? But as you got excited about it, mate, so do we. And where can you make claims on, renovations, knockdown, rebuild investments? Because we've got a lot of customers out there that do look at going down that path. So obviously they've got to engage with yourself early in that process. But tell us a bit about scrapping, mate.
Yeah, good questions, Aaron. Scrapping. Now, if you're driving again, pull over. Pull over. I don't want you all to lose your minds with this. So here is the scenario. Someone currently owns an investment property on a large block, and their intention is to knock that building over and build 1, 2, 3 more investment properties. Okay. Basically, what would happen is don't touch a hammer until you've contacted us first. We will go out to that old investment property and we will pinpoint every possible deduction. We'll put a value on the kitchen, a value on the bathroom. There might be a pool in there that's being ripped out of there to flatten out to build those 3 townhouses. Prior to any demolition, we go through and say cost up $20,000 or $30,000 worth of total depreciation in that old building. That 20 to 30K full amount can be claimed at 100%. And then when you rebuild the new assets, it's 10, 15 grand a pop. So any knockdown rebuild, can claim the residual value of those old assets at 100%. Now, one thing I say is there's a lot of intricate parts that go with that. Please consult your accountant first. I can't specify that enough because every scenario is different. But in essence, if it's an investment property, you stick a bulldozer through it. We've come up with, say, $30,000 worth of total depreciation. That entire lump sum can be claimed at 100%.
And I'm sure, Theo, if you again can't give any specific advice on this, but if you know you're going to knock a place down, you stick a tenant in there for a period of time, whatever the legislation requires you to do,
Yes.
right? You then knock the joint down. Hopefully the tenant's not in there. Right? You now build 2 properties on that. So you might build 2 units. You live in one, but the other one's an investment property. There will be a big share of that now becomes depreciable.
Darren, you know what I've just learned? You're going to become my accountant. That is awesome. I want to do it. I want to do it right now. You're right, and that's exactly right. Speak to your accountant. Every scenario is different, but you've hit the nail on the head. You know, the whole idea, it does need to be an income-producing property for a period of time first and after the fact, but consult your accountant on those needs.
Yeah,
that's good.
That's very good. So 7 out of 10 people, roughly, in your experience, aren't understanding or taking advantage of depreciation. I'd imagine that's probably higher for the term scrapping, and going through their understanding of that would be even higher. So this is what this podcast is all about, Theo, because I think obviously this is for investors. In this case, this particular episode, this is going to save them money and introduce them to a couple of things that perhaps they're not utilising right now, at least one of those in addition, if they are getting depreciation reports. So first I want to say thank you for that, because it's just part and parcel with what we're trying to do and provide value to the viewers and the listeners. Now, obviously, we're here to talk about new builds and target the new home building industry. However, I guess it'd be remiss not to mention that it's not just that you deal with. So for anyone who has investments out there, it doesn't have to be brand new homes. What other areas do you sort of cover? You sort of touched on it a little bit before, but just as far as your business, just share that a little bit more. Yeah.
No, thank you so much. And obviously this is for, we love this podcast, brand new builds. I love brand new builds. That's Maximise tax deduction straight away. 10, 15 grand in the first year. Brand new are amazing. Older properties, as you said, can claim. Airbnbs can claim. Commercial properties, no matter what it is. It could be an office, a warehouse. It could be a coffee shop. It could be absolutely anything. Even businesses, we can do these reports on. So I was just mentioned that coffee shop before. If the coffee shop owner owns the building in a self-managed super fund, we can do a report on the building. But as the business, if it's in a different entity, we can actually complete a report on the actual business. So that's the cups, the forks, the doilies, anything that makes up that particular business can have one of our reports completed to maximise every deduction.
Yeah. Yeah, it's very good. I think Darren and I, we do talk about this a fair bit in a sense of, and we've called it different things, but if you're an investor in new home building, it's good to have a team. And even if you're out there actually buying established, it's still good to have a team. And in terms of that team, putting on a really reliable finance broker is one of the first steps that we encourage people to take. Someone who knows construction lending and things like that, and going to a builder or a sales consultant, someone who can take you through the process really simple, easy, efficiently, and hit the brief, hit the numbers that you're looking for based on the feedback you're getting from a broker and obviously an accountant and all that sort of stuff. And I don't know if people add a tax depreciation expert to their team necessarily at the forefront in their mind, but I think this episode highlights it. That's definitely one that they should be adding. So I just wanted to ask you, and probably if it's okay for you to share, Theo, so your business, what would how do the people contact you? What is the fee for the report, if you could share it at the time we're recording this, so that'll be released June 2024. Give the guys and girls out there, how much it is and how it works.
No, perfect. And again, thank you. So our fees for any residential property right now start at $450 plus GST. And I hope everyone pulled over before I said that, because I didn't want them to crash if they've ever paid for one a lot more than that. So our fees start at $450 plus GST for any residential property right now. For a commercial, they are case by case. As you can appreciate, I can't do that for a Bunnings warehouse. So the Bunnings warehouse, people out there, no, talk to me. I'll be able to quote that up accordingly. To contact our lovely team, we're located all over Australia. So we've got presence all over Australia. So call the 417317 number. It'll go straight through to that local representative based in your state to begin the process on those ones. If you want to have a look at a bit more detail about our business and who we are, jump onto our website. It's www.tdaqs.com.au. You go to the About Us page and you find that lovely strapping man on there. His name's Daniel Ferrucci. That's my business partner. The other guy's me, Theo. So, no, we love what we do. The whole idea of what we do is to extract every possible deduction. You said before, Colin, about a team having a team. One thing I forgot to mention is not everyone actually has an account. Some people do their own return. So they might be going, I have never heard of anything like this. And that's all because of listening to this podcast. So that's why, like you said, a team is critical. Different avenues to connect with people are critical because, again, people might not have that full team in place where they miss out on things. So I personally wanted to say a big thank you to both of you allowing me to be on today. I hope we had a bit of fun, but, anytime, I love it. I'm here to help. So thank you.
That's great, mate. We really appreciate your time as well. And I think the key out of this is, if you're not using a quantity surveyor, we've got one of the best in the business on the podcast today. So pick up the phone and give Theo a call and, really maximize those tax returns. Don't be silly about what you're doing. It's a small cost over, like you said, at $450 over 40 years, mate. It's like $10 a year. What are you worried about? Like, get in there. It's even the depreciation schedule fee is tax deductible.
Yeah,
so
100% tax deductible, Darren. That's 100%. Write everything off. Just do it.
So absolutely. So get in there, maximize your returns. We've had some other, and I was going to give a shout out to one of our previous guests. We had a guy called Atul Sharma on our podcast, and a shout out to Atul and all of his friends that are on his private Facebook group that, would really benefit from this because a lot of those guys are investors, and we'll make sure that he shares this episode with those guys as well because I think there'll be a whole heap of people who are missing out on this opportunity to be, maximising their returns through tax depreciation, which is fantastic. So
yeah, good call, Daz. I'm actually meeting with Atul next week to say hello, see how he's going. So
there you go.
We'll mention that. Yeah, really good. So thank you again, Theo, and to all the viewers, all the listeners, thank you again, as always, to you guys. So if you like what you hear, please leave us a 5-star review. That would be helpful on the platform that you're on. If you've got any other questions or topic ideas, homebuildinghub.com.au, that's where you can jump on there and you can, of course, leave a question there for us. If you want to see what other guests we've had on, we've actually added that to the website, Darren, haven't we? So all the guests are on there with a pretty picture of them, but really a link to the episode that they're on. So if we're talking about you creating a team for your investment, you're talking about brokers we've had on, conveyancers we've had on, and then the likes of Theo as well. We got a team right there for you. So happy to help. We'll send you the invoice, I reckon. Daz, what do you think? Hey? So awesome. Thanks, guys. We appreciate you listening and watching, and we will look forward to seeing you on the next one. Thank you. Bye-bye. Thanks for listening to the Home Building Hub. As part of the podcast, we have to be a little careful to cover ourselves on a legal standpoint. So we do have a disclaimer. Whilst we're all about providing value to you, this podcast should not be considered legal or financial advice. It does contain general information only, and you should seek out independent professional advice on your own personal situation before you make any legal or financial decisions.
1